So, is the Santa Claus rally canceled or postponed or just not going to happen at all, right? So, we're going to be talking about that today, ladies and gentlemen, as the S&P is trying, very desperately trying to make a significant close above the 50-day moving average. We did push back above it through the intraday, and that is a good thing and a bad thing at the same time. If you look at the stock heat map that we just talked about, it's pretty much a bloody day out there. Not a single patch of green except AMD, ironically, having a green day out there. But other than that, everything else is red. AVGO, Google, Apple, Nvidia, Microsoft, all the big names, Tesla, everyone having a pretty rough day. However, we swap it over to the weekly view, it actually changes completely, right? You're truly getting a rally from last week where Jerome Powell gave you not so bright news. Nvidia up 5.37, Apple up 2.85, Meta up 1%, Amazon, Google, they're all green. Even Tesla, after having a pretty rough day today, is still green on the week and majority of the market. We can also see as the S&P is trying to close above that 50-day moving average. We will not have the close in this video necessarily. You guys are going to have to check that out for yourself. Trying to get this out for you guys at 4 o'clock. So S&P looked like it wants to close above it. We got some good signs out there. Number one, it is a wicking candle to the downside. It's not the prettiest candle. We did leave a gap up here, which is opportunity for next week. And subsequently, the Nasdaq has a similar story where we can see that we didn't break down the week, right? So check mark there. We're having wicking candles to the downside. So that's another positive thing. And also, even if we look at, let's say, the Russell, right? Not necessarily the best constructive candle. It is still a gap down and leaving a gap to the upside, but it made a lower low from the previous day, but not a lower low on the week. That's the main thing. If we look at the weekly chart for a lot of these companies, IWM trying to have a weekly higher close, which is productive, but again, still small caps being a big burden on it. S&P actually going to look like it's going to close higher than the previous week. Okay, so that's a positive. And we didn't make another weekly lower low. However, I don't like the candle wick to the upside because that's absorbing a lot of sellers. A lot of people wanted to sell. Again, that could be for tax harvest reasons. If you got basically profit in the S&P and a loss somewhere else, and you smash those together and basically equates to zero, a lot of people are saying, hey, I'm willing to take that trade. And right now we have to close above 592.65. That is the number in the sand, line in the sand that pretty much defines how the rest of the subsequent year may go. Because every time the S&P's gone back above the 50, right, we can go back to here, gets back above the 50, nice rally, touches the 50, nice rally again. So we see this time and time again where the S&P has a tendency to rally pretty hard once it gets above that 50. Subsequently, if we close below the 50, then other questions become into play. Is the weekly lower low going to establish? Is the 200-day moving average going to establish? And I don't know about you, but I don't want to see a 6% haircut in the S&P. As much as I would love a discount to buy other companies, I really just don't want to see that. I just want to see higher highs on the S&P. That is what, at heart, I really want to see. Also, not a lot of news today subsequently, so make sure you guys follow us at fatalinvesting.com and on Twitter, I mean. But again, not a lot of news, and honestly, the news for the week was pretty you had Christmas, right? So there wasn't a lot this week to go off of. We had some news come out on Friday, but mainly holidays, right? And we can see net speculative positions are going to be published after the market is closed. It's going to be very interesting. We'll cover these in the weekend deep dive. But I want to see if the bears add or contracted their positions based off last week. I think they're going to basically break even is my expectation. And as you saw here, nothing really much came out. Wholesale inventories Friday, there was not really a catalyzed event. One of the peculiar things that I'm seeing is the reverse repo. And we're going to get into bonds in just a second because everyone's pointed at the bond market as this boo-ha-ha, like the market's going to crash. And I'm like, it's very interesting seeing how the reverse repo, they're paying a lower percentage, but people are still putting money into it. So it's like, they're not really looking at it as like a safe haven per se, but they're like, hey, I want to keep some money in here because it's a safe asset, which could explain why bonds have been doing what they've been doing. And it's very peculiar that the longer dated yields are the ones that are pushing, while the shorter dated yields are basically staying flat or going down. So to me, this basically means that they don't foresee a market cliff coming because they're rotating into those 10 years and 30s and because they want to get that higher premium because there's uncertainty, right? We can kind of predict right now where the Fed's going to be. In the next 2 years, they're going to basically be where they are now, or they're going to cut rates. So, okay, that's a pretty clear cut. There's not a lot of things that can happen between now and then. However, the 10 and 20 and 30 year, there's a lot of uncertainty, and also the premium the dollar is commanding. Everyone's like, hey, I want a higher premium to offset the risk that I'm putting forward, because the debt ceiling is an issue. The financial spending is an issue. They're not comfortable necessarily with the financial situation of the country. As we saw with the yield curve just heading down lower, traditionally this is where you get these crash phases of the yield curve. So we still have to keep an eye on that. But the step number one of that is going to be, remember, the S&P has to make a weekly lower low. It has to close below the 50. As it looks right now, we got 30 minutes to the close. It's not going to close below the 50. They are trying to push it, right? As we can see here, there's been a conservative push to the downside. Do people want to hold risk over the weekend? That is the question we're going to try to establish. And simply put it, we can look to some of the bigger name stocks to kind of know what they're seeing, right? We can look at things like Amazon, right? Wicking candle to the downside, not establishing a new low. So this is what I say, okay, this is looking constructive. It's going sideways. So we have a gap to the upside. Okay, constructive. NVIDIA has been trailing, trying to make a weekly higher high close, right? The orange line, 136.70. We're sitting right at it is the weekly higher high. So that would actually be constructive for semis. AMD actually being one of the only green companies on the day Friday. So it's very, very interesting of like semis, right, being green as others are down. Meta looking like it just wants to consolidate around this 50, had a big push above the 50, overshot, retested the 50, looking to find consolidation there. Okay, that's a simple A to B pattern for me. That to the upside, we're looking at 662 for Meta. Okay, so there's potential to the upside. If we look at Apple, right, Apple dominated the market and is looking to close on a weekly higher high, heading for that $4 trillion mark. Can NVIDIA overtake it, or is Apple going to get to 4 trillion and then the race becomes who gets to 5 trillion first? Throw them down in the comment section below, guys, which one you think. Tesla, even like the risky assets, right? And we'll get into Bitcoin in just a second. Tesla being super risky, again, up 72%, down 15%, consolidating sideways, classic bull flag pattern kind of forming here. And I'm just like, I see where next week could be bullish, right? I'm not saying it is going to be bullish. I'm saying it could be bullish, especially with the VIX. The VIX being a wicking candle to the upside. Traditionally, when we get these big spouts of volatility, right, you get some secondary jump and then it pushes back down. We saw here, this could be considered the secondary jump right here and push back down. So are we seeing that on the VIX? Big push, secondary jump. We're going to see consolidation back down to calmness, especially when the fear and greed is sitting at 34, which previously we were actually at like 35. Previously, we're now at 34. During the day, it was back down to like 31. So the market was in this period of like, hey, we don't know what's going on. And also, if we just look to next week, right, this is a pretty simple analysis. For next week, there's not a lot of data. There's some business manufacturing data. Tuesday is a holiday in certain regions of the country, so we're not going to get anything. Wednesday is New Year's Eve for everyone, so everyone's going to be happy, hungry. The Thursday, everyone's hungover after New Year's, so nothing really going to be going crazy. We get some ISM data, and that is it. We get ISM data, and that's it. Job numbers are the following week, followed by CPI, followed by Powell, right? So, or PC and then Powell, right? So it's going to be a freaking crazy one. And also, if we look at the CME tool, right, as always, we can see this 10.7% is slowly ticking up. So the question is the sentiment of the craziness that the bulls established going to continue in 2025? I personally think so, because everyone's just underestimating a lot of things. And it begs a question of what's going to push us down if the last 2 years weren't successful in pushing us down. We kind of know what Donald Trump's going to do. You're going to have the volatility, but it's not as volatile as previously because we kind of seen the playbook, right? Everyone's seen the playbook. So the market has to see something new in order for that playbook to drastically change. And as we can see here, heading into the close, we're not really seeing a lot of news out there that's going to cause us to basically go ballistic in one way or another. As we see here, jumping back over to the S&P, it is going to be a close, right? So we're within $1 striking distance and pushing down lower, right? So it's going to be interesting to see how that last hour basically trickles out, the last 15 minutes, which we consider pounder hour, where things really get to increased volume. And also if we see like Bitcoin, right? Bitcoin, I promised that I would cover this, is in an area of consolidation, right? We haven't established a new low, and actually we're having subsequent higher lows right here. If you establish today's candle as the new low, this is sideways consolidation as the 50 is moving up, so it's creating more of a support structure, getting ready for its next bout of pushing, right? We haven't seen the traditional thing of Bitcoin where it just failed to get above the highs and then pushed, right? So it pushed and then pushed to a new all-time high, right? So we have several pushes to all-time highs, subsequently leading to me to believe, okay, everyone's holding risk, Bitcoin, right? The riskiest asset into the new year. So why are we going to suddenly get this like dynamic shift and change of people being risk adverse, right? How risk adverse or unadverse are they going to be in 2025? Bitcoin's a pretty good indicator of that. Simply saying, right, the S&P, again, with the close coming up at 4 o'clock, this is what you guys need to pay attention to. Are we not going to close above that magical 592 number, 63? And if we do, where are we heading from here? So make sure you guys are subscribed to the channel so you know when the weekend deep dive is available. If you guys are wondering how we got all these wonderful levels, I'll have the video queued up over here for you guys to check out the weekend deep dive to know exactly what the plan was for this week, how it all played out, and what I was trading. So make sure you guys check that out. And thank you all so much for watching, and I'll see you in the next one.